Hello, everyone. Uh, we will wait for, I think, 3-4 minutes to join other participants, and then we will start our webinar. So today I will introduce the webinar about company structuring for e-residents. You can ask your questions in the chat, and I will read them and answer after the slides. Mhm. More people are coming. We'll wait 1 more minute, I think, and then we will start to keep in 1 hour. Okay, I think we can start. Can you please type to the chat plus if you hear me and see the slides, so I am sure that everything is correct. Thank you, Brian. Okay, I think we can start. Uh, I will add other participants during the webinar if I see that they are coming. So today I'm representing LEGID, the Legal Market Network. I will talk about our app after the webinar. So let me introduce shortly myself. My name is Georgi Dzaniasvili. I'm a lawyer and as well I'm CEO of LEGID. I work as a lawyer like 12 years, maybe a little bit more. And I finished Tartu University, I have master degree, and I mainly work in labor law in fields of labor law, commercial law. I work with startups. Uh, sorry, do you hear that? You have no sound. Okay, I think that it's a problem with your computer, Peter. You need to make something with your settings to hear me. But let me continue. So yeah, I work with startups and I also uh, I also provide advice in taxation. But today we'll keep like general information. If you need more specific, if you have more specific questions, you can ask me after. You can ask them on Legit, and also you can contact me, find me on LinkedIn, and write to me. And I think we can manage your questions. So this is shortly about me. Let's go further. So as I expect, uh, like most of the participants are not yet e-residents or are e-residents for short time. And so I will start with the basics about the companies in Estonia. So you see on these slides the main forms of business in Estonia. So the most popular is OU, the private limited company. So nowadays you can establish the company with the share capital 1 euro cent per shareholder. But if the company goes to the bankruptcy, the shareholders should add missing amount up to 2,500 euros. So now the capital should be paid even if it's 1 euro cent. Like before 2023, we had this system when you could register a company without share capital, but it's not longer valid. So shareholders are not personally liable in this company, in this type of company, for the obligations of the company. And when the contribution of the share capital is not yet paid, the shareholder is liable to the private limited company for its financial obligations in the amount of the unpaid contribution. So it's better if you pay the capital of 2,500 euros, not like from the beginning, but in the first year of the company, to keep safe the shareholder. And the obligatory management body of the private limited company is the management board. A supervisory board is mandatory only if specified in articles of association. So if you decide to have this supervisory board, you can specify it in your articles of association and have it, but it's not mandatory. And the highest level of management of a private limited company is the meeting of shareholders. The second type of the company is the public limited company, aktsiaselts in Estonian, and it should have a minimum share capital of 25,000 euros and fully paid. And shareholders are not personally liable for the public limited company's obligations as well. And the supreme management body of the public limited company is the general meeting of shareholders. And the public limited company must have a management board and supervisory board. Another type of the businesses is sole proprietor. So the one of the main things how it differs from the OU or AS is that it has unlimited liability and there is no management bodies. So you are personally liable with your personal money with the personal stuff for the obligations, for all obligations. Another type is a limited partnership. The share capital, there is no share capital. Amount of the contribution is stipulated in the partnership agreement. At least one general partner has unlimited liability for the partnership's obligations. So you can choose with your partner who will be liable. Maybe add some participants. Okay, let's continue. So there is also no obligatory management bodies. If we are talking about commercial association, the share capital should be 2,500 euros, and partners are not personally liable for the commercial association's obligations unless agreed otherwise. The general meeting is the association's supreme body, and the management board is the association's management body. And the last is the non-profit organization. So there is no share capital. And a non-profit association is a voluntary association of persons whose objective or main activity is not the earning of income from economic activity. A non-profit association may engage in economic activity and earn income, but it must be used to achieve the objectives specified in its articles of association. For example, I'm a Georgian by nationality, and I have a non-profit organization of the Georgian community. So if we get income, we use this money to uh, to introduce Georgian culture, traditions, and other things. So we can take it out like a dividends, as we can do with private limited company or public limited company. The only possibility how to take money out is to pay salaries and pay taxes for it. Okay, let's move further. So here you see the payments and that is possible to make to company members. So generally it's salary, management board members fee, and dividends. And now we'll talk about it specifically. Here you can see the comparison of employment and board members contract. So by general rule, if the company wants to pay to the board member for the management services, it should be concluded management board members contract. The employment contract could be signed only for a job that is not related to the management. For example, IT, or you make production by yourself, by your hands, or other things. The more board members contract could be combined of the Law of Obligations Act and Employment Contract Act clauses, but it's governed by Law of Obligations Act. And it's not mandatory to sign the management board members contract if you work for yourself. So it's one person company, but it's better if you have the papers for the accounting. Also, you can see here that the subordination relationship is a bit different. So with deployment contract, you always have fixed working hours, place designated, probation period, and other things. But if you sign management board members contract, you have, for example, probation period or fixed working hours only if it's agreed. Now we talk about salary and board members fee taxes. So for today, the income tax in Estonia is 20%, but from next year it will be 22%. Also, you should pay from the salary the social tax, employment insurance, and contribution to the mandatory funded pension if you are a member of this of the pension. So the board members fee, let's name it like directors fee. So Estonia rules provide that the director's fee paid by an Estonian company to a non-resident director are always subject to personal income tax. Tax treaties follow the same logic as and normally allocate the taxing rights to the country where the company resides. This means that since the company is established in Estonia, then all directors' fee are taxed in Estonia. So even if you have Estonian company, but you work from other country and you are tax resident of another country, but you receive the director's fee, it is taxable in Estonia by income tax. Social tax gets trickier depending on where you live, whether you're covered by social security scheme and whether your country has an agreement for social security with Estonia or is a part of the EU or European Economic Area or in Switzerland. All of these factors have to be considered. So in some cases, such double contributions can therefore be avoided. For example, you live and are secured for social benefits in an EU member state, Norway, Iceland, Liechtenstein, or Switzerland. To avoid having the company pay 33 social tax in Estonia, you should obtain an A1 certificate providing your coverage from the local competent authorities and submit it to Estonian tax authorities. The A1 and other forms regarding social security rights uh, are listed also on the Tax and Board Customs website. So if you live and are insured for Social Security in Canada, Ukraine, or Australia, and the countries that have concluded the agreement of Social Security with Estonia, in this case, you can present the respective certificate demonstrating your Social Security coverage issued by your local authorities to allow the company to exempt directors' fee from social tax in Estonia. But if directors' fee paid to the residents of third countries or those persons not covered by social security scheme in EU or treaty countries will not be able to get an exemption from Estonia social tax. So you should pay social tax here as well. And the payments made to non-resident must be declared on TSD Annex 2 and remitted by the 10th day of the month when the payment was made. If we're talking about salary, so normally it is also taxed by income tax of 20% and apply 33 social tax on salary payments and also unemployment insurance and contribution to mandatory funded pension. If the work, however, is not physically performed in Estonia, then no Estonian income tax nor Estonian social tax or an unemployment contribution applies to the salary payments, as these are not considered to be sourced in Estonia. The income is taxable in the state of residence of the employee. So if you have employee in another country, you should firstly, you should check with the local authorities of this country. Should you register as a foreigner employer there? Because some countries require it. If not, then the person who, like employee, works in this country, he is obligated to declare his income or her income in this country and pay the taxes according to the tax system. If you have a non-resident employee who does not work physically in Estonia, then you don't have to report anything to the employee register of Estonia as well. However, the payments made to non-residents must be declared on tax return TSD Annex 2 as well. So let's talk about dividends taxation. Taxes from dividends should be paid by the company, not by the person. In order to distribute dividends, you should usually follow the next steps that I will name. If your company was founded before 2023, make sure that you have paid the mandatory share capital. For companies founded after 2023, the share capital contribution must be made when founding the company. Differing this payment was not possible and so should have no effect on your ability to pay dividends. The latest annual report of the company should be approved with a digitally signed resolution of the shareholder or shareholders. When deciding on the dividend amount, make sure it does not exceed the retained earnings and distribute the profit according to the annual report of the company. Secondly, the net assets of the company may not fall below half of the share capital of the mandatory minimum share capital of the company as a result of the dividend payment, uh, whichever is higher. The general meeting of the shareholders decides to distribute dividends on the basis of the approved annual report in the form of the shareholders' resolution. As the sole shareholder, if you are sole shareholder, you can make by yourself and like sign it personally. And then the company should pay the cash dividends to the shareholders' current account. Um, and the respective entries should be made in accounting. The dividend payment should be declared on TSD Annex 7 and tax due on the dividend distribution remitted by the 10th day of the month following the actual payment. Most likely, you should declare the dividends income in your annual personal income tax return if in your state of residence, and also disclose the amount of tax that has been paid in Estonia. If necessary, a certificate can be requested from the tax authorities confirming the tax amount in Estonia. Depending on the rules of your state of the residence, this Estonian dividend income may also be subject to tax there, but there could be a possibility to credit the tax costs against your domestic tax liability or exempt it altogether in order to eliminate any double taxation. So what if the payment receiver is not an Estonian tax resident? Non-residents have a tax liability in Estonia in respect of the income derived exclusively from Estonian income sources. The taxation of non-residents' income in Estonia is influenced by bilateral tax treaties between countries. Estonia has signed comprehensive avoidance of double taxation agreements with 64 countries. That double taxation arises when two or more countries imposes taxes on the same taxpayer in respect of the same taxable income or capital. In other words, the same income is being taxed twice. The country of source where the income arises and the country of residence where the income is received. To relieve taxpayer from the burden of double taxation, countries provide various types of reliefs, either under their domestic law, tax laws, or under the tax treaties that they have entered into with other countries. That means this that if you are taxpayer in another country, you should always read carefully the double taxation, the avoidance of double taxation agreement, and understand should you pay additionally something in your country, or it's enough that you paid in Estonia. For example, if income is taxed in Estonia for 20% today, but in your home country is, for example, 50%, then you may pay additionally this 30% in your country to reach this 50%. So you should always consult with not only Estonian tax advisor, but with your home country tax advisor to understand either you should pay something additionally or not. Here on the slide, you see the taxable income in Estonia for non-residents. You can also find this list on the webpage of Estonian Tax Board. So this is, as I said previously, the management board members' fee, rental income, everything that is related to the real estate, license fee, business income, dividends, gambling winnings, pensions, gains from transfer of property, and other that you see on this slide. Let's talk about VAT. So standard rate is 22%. So you must pay VAT if you are registered as a VAT payer. will be obligated to register when your turnover exceeds 40,000 euros a year, and the VAT rates are the same for all type of companies. It's important that if you have online marketplace or provide digital services business, you should register as a VAT payer immediately. So from the first euro, that means that not wait until your turnover exceeds 40K a year. So these services are charged by VAT from your first sale. You are subject to VAT even if you buy digital services from abroad. I'll name some digital services that you have this understanding. What are they? So transfer of a web platform, website administration, remote maintenance of software and devices, transfer and updating of software delivered electronically, provisions of images, texts, and information transmitted electronically, as well as access to electronic databases, electronically transmitted music, films, and games, including gambling, electronic distance learning, and other similar services to this mentioned above. For avoidance of doubt, I will name electronically supplied services that are not obligated by VAT. So this is radio and television broadcasting services, telecommunication services, goods ordered and proceeded electronically, CD-rooms, diskettes, data carriers, printed materials such as books, newsletters, newspapers, or magazines, video cassettes and DVDs, games on CD-room, services of specialists such as lawyers and financial consultants, advising clients by email, training services where the instructor delivers the course content via internet or another computer network, offline computer equipment repair services, offline database services, and other. And let's talk about defense tax as well that will come in 2026. I will talk only about the defense tax which is related to the company. So the Estonian parliament is currently discussing a bill introducing the defense tax. It will likely be adopted before the end of the year. Defense tax is not formally an income tax, but it works like an annual corporate and personal income tax. So we might as well call it an income tax. So how it works? All entities and persons liable for Estonian income tax will pay an additional 2% in defense tax. For legal entities, this would apply to accounting profits and will be payable on a quarterly basis, with the first year for tax base being 2025. The plan is to tax profits from 2025 through to 2028. So only 3 years. But only time will tell whether it will indeed be a temporary tax. So when should you pay it? The first tax base year is 2025. So in 2 months, your activities will already be determining how much tax you should be paying. The first defense tax quarterly payment will be due in the third quarter of 2026. The tax is calculated based on the profits from 2025. Certain special rules must be followed in the financial year if financial year does not match the calendar year. So the defense tax must be paid on the accounting profits, regardless of whether the cash flow means cash is available for this. Indeed, the tax rate of 2% is not too high compared to the ordinary corporate income tax rate. But for companies making long-term investments that were relying on the deferral of tax under our existing system, payments of the defense tax could mean a real struggle liquidity-wise. The only way to be able to pay the tax might be to sell some forest or real estate. The dividends an Estonian company has received from another company or from Estonian company or foreign subsidiary are not taxable under the defense tax in Estonia. And shortly about LEGID, it's our solution for the all people who needs legal advice. We work in Estonia, Latvia, Lithuania, Poland, and Netherlands, and we're expanding to other countries as well. So if you don't know the lawyer in these countries, but you need the legal advice, you can go to the legid.app, register there, submit your questions for free, and receive proposals from the specialists, lawyers, about how they can help you and what the fee they will require. And if you accept it, you are going to the confidential chat where you have the conversation. You can have consultation there. You can share documents, and the main thing is that it is flexible, and the all lawyers that are in our system, they are real lawyers with the diploma. They have necessary licenses, so you can be sure that the work will be done, and until it is, and you can always choose the lawyer. If, for example, you work with one lawyer and everything was great, you can always ask for the services through the legid.app with him or she, and continue conversation. So that's all from my side. You can, if you have any questions, please type in the chat, and I will try to answer. Yes, I think the recording will be in a LinkedIn page, but it will take a time to upload it. Can you specify what games? Online games or? Okay, online. Yes. It's not taxable by VAT from the first year, but if you exceed 40,000 euros, you should register as VAT payer. Is the e-resident depend on having opened up a company, or it's the other way around? So e-residency is generally it's access to the electronical government of Estonia. So all the services you may have no company, but you can have e-residency. For example, if you are employee in Estonia as a foreigner employee, you can have this e-residency card and have access to the healthcare and other services of the government. It's not obligatory to open the company if you have e-residency, but even the company could be registered without e-residency card, but it takes more time, I'll say, and you definitely will need in future e-residency in any case to sign the contracts, to access to the banks and other things. Where can I find what is defined as health or hygiene products? Uh, can you specify for what reason? Uh, uh, Generally, I can. Do I need a residency to open online company if I'm German? It will help you to open the company from your home country, to not visit Estonia, and you will open it online. in one day after you receive this e-residency card, but you also can open the company issuing power of attorney to the lawyer or any service provider in Estonia, or physically come to Estonia. But e-residency card will definitely help you make it smoother and faster. Even to operate after with your company, you definitely will need e-residency card to make it easier for yourself. Does Estonia provide tax exemption period for tech startups? No. For tech startups, they have exception, for example, to have visa for foreigner employees. If you have this stamp that you're a startup, not only in the name, but by the official commission, you are recognized as a startup, you can easily bring foreigner employees to Estonia. If I live in another country, but the activities are totally remote, I don't want to take money out of it for years. How can I avoid that my tax authorities see it local based on effective place on management? So if you have Estonian company and you don't take out money, nobody will see that you should pay tax or pay tax, because for Estonian company, it's not obligatory to take out money as a dividends or salary. But our tax authorities, if they see that the company gains a lot of money and nobody receives salary or dividends, they will write to you that somebody should receive money because somebody makes work, and it is not realistic that this work is done for free. But by law, you are not obligated to pay money out and pay taxes for this. Only if you pay out, then you pay taxes. But it's not obligatory to pay it out, like from the first year or the second year. For example, you have investment company, it's okay that you keep money for years there. But if you have active business, for example, you sell something or buy and sell, so somebody should receive at least the minimum salary. uh, Also, you can show to your local tax authority certificates from the Estonian tax system that what taxes were paid or not paid. So if there is nothing paid, you can also show the certificate that nothing was declared and it's like 0 there. Protein can be health product, exercise equipment can also be health product. This you can find in the legal acts. I can tell you in which one from my head now, because I never worked with the health or hygienic products. Uh, but I think if you ask this question in LEGID app, you will find answer easily. Can I open a company if I live in Australia and I have a Pakistani passport? Yes, you can open the company, but if it depends how you want to proceed. If you come physically to Estonia, it's no problem to open. You go to the notary and open the company. With the e-residency card, it depends. Will you receive e-residency card or not? Like it's not 100% that all people who apply for e-residency will receive it, because there is a questionnaire. These people should be checked, and if the uh, if our authorities will think that you should receive e-residency card, you will receive. If not, it's like nothing to do with this. If a pharmaceutical marketing company is registered in Estonia and has its headquarters in another country, is it utilized in Estonia workforce and managing them remotely? What taxes apply? If you provide only the marketing for the another company in another country, it's like providing the services, and if you pay salary here in Estonia for Estonian residents, you should pay here. If you pay it for other country residents, then as I mentioned before, they should declare their income in their home country. But if Estonian company, it also depends, is it subsidiary or not subsidiary about the mm, about the workforce. I was planning to open a OU for investment purposes, but now seems like investment platforms such as Lightyear will also be able to offer investment accounts for simple investment. Do you think it's still need to open AU for optimized taxes? Yes, I heard that Lightyear, the new law came to the force that Lightyear and other similar companies can provide investment account. So basically, if you invest as a physical person, nothing is taxable until you take money out. But it all depends on the amount of the investments and where you invest. If you invest only in stock and crypto or any other things, like not real estate or business, like physical business, it's okay to have light year, I think. It also depends on your personal tax residence. But OU is better if you have like huge investments, if you invest to the startups, if you invest to the real estate. Yes, I'll say because these 2% of defense tax will not be very positive for the investors. I didn't receive answer for part two. How can I avoid that my tax authorities see the Estonian company as a local in my country and apply the local corporate tax based on effective placement? I don't mind paying personal income tax in my country. That's okay. I'm concerned about corporate tax based on effective. About place of management. Yes. If you want that Estonian company will have will pay taxes in your country where you work, where you have management board and other things, yeah, you should apply it for your local tax authorities and show that the management board and the employees or any other things, the main like businesses in this country. Otherwise, you can do this. There is option, I think, but it's not clear that you submit the application to the Estonian tax authorities, showing that the management board is in another country, the main business is in another country, and they like unregister your tax residence from Estonia. You want to pay in Estonia, so I don't understand. How did my tax authority? So if I understand correctly, you want to work from other country, but you have a Estonian company and the business will be in Estonia or worldwide or in another country. Can you specify it, please? Business is worldwide. Okay. But management board member is in another country and employees. So if management board member is in other country, it's like more than 60% that you should pay tax in this another country where you have this management board, because decisions are made there and the business is going from this country. So to avoid this, You should have Estonian management board member, somebody who is from Estonia, or you should physically come to Estonia and live here. Third option is to have employees here and the main business, but from time to time visit Estonia and show that the main decisions are made here. So you make shareholder resolutions here and other things. If you're a digital nomad, should I pay tax in another country? Oh, it's complicated question. It all depends on the where you work, what you do, and how you do. So it needs like more specific advice and analyze. Uh, It's better to make it as a separate consultation. So if there is no other questions, I think we can finish. Thank you for listening. Hope you had the information from my side. And if you will need any other advice, visit legid.app and you can find me there as well, or find me in LinkedIn and we can make a separate consultation. Thank you. Have a nice day.